This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, August 6, 2015. Euro dollar. So setbacks have been well supported for the time being ahead of that 108.09 low from July 20th, and at this point the market is confined to some consolidation above that key low. However, the overall downtrend remains intact, and only a break back above the high that we saw back on the 27th of July at 111.30 would take the immediate pressure off the downside. Sterling dollar. So a cable outlook remains highly constructive with the market looking to put in a higher low at 153.50. It's been consolidating over the past several days, although this higher low does look to be in place, or wants to attempt to be put in place in favor of the next upside extension back towards and eventually above that recent 2015 peak, going back to the 18th of June at 159.30. At this point, only a break back below 153.50 would take the immediate pressure off the top side. Dollar yen. So dollar yen is traded up above some key internal resistance in the 124.50 area, with the focus now on a potential retest of that multi-year peak from June at 125.85. At this point, only a breakback below the low that we saw on Wednesday would take the immediate pressure off the top side. That low comes in at the 124 figure. Euro Swiss. So Euro Swiss continues with its constructive outlook following that break that we saw several days back above previous resistance at 105.75, and the market is now focused on a move up towards the February peak at 108.15. At this point, look for any initial setbacks to be very well supported above that previous resistance at 105.75, while ultimately only back below 104 would take the immediate pressure off the top side. Aussie dollar. So Aussie dollar has triggered a double bottom in recent trade, with the break now of the neckline at 73.50 now exposing a further upside correction towards a measured move objective in the 75 area. But the overall downtrend is intact, and the market and any gains in this market towards 75 are viewed as corrective, with a lower top side out ahead of a bearish resumption back below that recent multi-year low that we saw, which comes in around 72.35. Dollar CAD. So dollar CAD has broken to yet another fresh 11-year high, with the market trading above 132 thus far. Daily studies are overbought, but we would need to see a break back below the lows going back to the 29th of July at 128.61 to officially take the immediate pressure off the top side and open the door for a more significant correction. Kiwi dollar. So Kiwi looks like it could be consolidating off recent lows that we saw on Wednesday, which came in just under 65 at the 64.91 level. But market setbacks have been very well supported on a close basis above 65 thus far, and we could see some more consolidation rather than seeing any significant downside follow through at current levels in favor of an unwinding of some more stretched technical studies before the market looks to officially resume its downtrend for the next major downside extension below 65 and towards the 60 area further down. At this point, though, if we do see a correction, the correction is expected to be very well capped ahead of the 67 to 68 area. SPX 500. So the S&P 500 continues to chop around, though the overall feeling here is that the market looks like it could be putting in a major top. At this point, we would need to see a break below that March low, which comes in around the 2040 area, to confirm and open the door for an acceleration of declines, while inability to do so will keep the idea of the potential bullish resumption beyond the May record high intact, though we would need to see a break eventually above that 2137 record high to confirm and open the door for fresh record highs. Until then, the topping outlook is favored with a pullback seen towards that March low at 2040. Gold. So gold has been in the process of consolidating over the past several days following that sharp drop to fresh multi-year lows below 1100. At this point, they can't rule out the possibility for deeper setbacks in this market below the recent multi-year low and towards critical psychological barriers at 1000 further down. However, daily studies are oversold, which does warn of the potential for a bit of a bounce, though the market would need to break back above previous support in the form of the previous 2015 low at 1142 to take the immediate pressure off the downside.